Housing playing an outsized role in the Fed's challenge to bring down inflation. There's a Wells Fargo report out that took a deep dive into the gap that we've seen between core PCE and core CPI. Here to explain, Yahoo Finance's Myles. Udland, Myles, you wrote about this in our morning brief earlier this week. Just talk to us about the discrepancy that we're seeing and this outsized role, as you put it, that housing is now playing in the Fed's fight to tame inflation.
Yeah, so if we look at that first chart of the gap between core PCE and core CPI, 1 percentage point is the gap right now. Historically, the gap's been about 0.3%, PCE on the lower side. So CPI in general has been a little bit higher, hotter, however you want to say it, but by a significantly smaller margin than we currently see. Now, everybody knows housing costs are a big driver of inflation overall. The BLS called out in its last CPI report that housing costs were over 2/3 of the annual increase in CPI we saw, and that's really creating this problem for the Fed where core CPI is still at 3.8%, almost double their target. Now, core PCE is running at 2.8% year over year, above the 2% target, but closer to there. And if we saw that chart where you see the share that housing plays in each measure, over 40% of core CPI is housing costs, up 5.9% year over year. Just 17.5% of PCE is housing costs, which are up 5.8% a year in that measurement. And so while the Fed cares about PCE and they will say they're focused on that measure, it's going to be challenging, and it is challenging at this point for the Fed to make this argument for needing to cut rates with the more popular inflation measure, CPI, still at 3.8%, even when, trimmed down for the Fed's preferred way to look at it. So, they are confident, everyone's confident. Housing costs, it's a kind of a lag, yada, yada, been through the whole rent story, all this, that, the other. But that gap is a major challenge. That measurement issue is a major challenge for the Fed in trying to communicate why they need to cut rates.
Yeah, you mentioned rent. There was a study out, I think it was published this morning by apartment.com. National average annual asking rent rose by about 0.7% in March compared to 0.8% the prior 2 months. So that's still going higher. Yeah. This entire housing picture, though, how much can the Fed, what levers can they really pull to influence it in the near term?
Well, it's interesting because I wrote this earlier this week. 2 weeks ago, I wrote how the Fed does not care about the housing market, because Powell also said that at his press conference back in January, where he was asked explicitly that question. And he said, we don't target housing policy or any rate of housing inflation or anything like this. And so, the Fed wants to walk this very narrow path of it has a dual mandate to look at inflation, to look at employment, and things that are related to that, of which obviously housing, wages are parts of it. They will accept and they will tell you point blank, that's not something that we know we can control. They obviously monitor it, but what housing prices do, what the stock market does, is not necessarily going to be a motivator to Powell.
And how much is it, real quick, because we only have 30 seconds, but it's not just housing, right? And you pointed that out. When you take a look at some of the other data points that we've gotten out, specifically manufacturing data, like you referenced in your piece, showing that inflation here, they're battling a lot of battles.
So the problem with inflation, and we do not have 30 seconds to do this, but Brad referenced it, right? We are on a huge lag for apartment rents specifically being the main driver here. Everyone's been waiting for them to bring down overall inflation. In that interim period, the economy has accelerated, as we talk about on this show every day, and that's bringing in this risk of, while housing comes to where you want it to be for the Fed to meet its goal, other parts of the economy get on firmer footing and inflation reaccelerates. Again, good for growth, people are happy with that, but for a Fed trying to get inflation all the way back to 2%, it's a major hurdle.
All right, Myles, always great to have you on set.
That was 30 seconds, by the way.
I think 57.30 is where we need to get out, so we're all right.